Welcome to this masterclass about the convenience of passive income. My name is Simon Snowder, and while people are joining in, I'm going to very slowly move towards starting the presentation. Um, I hope everybody can hear me, see me properly. Everybody is muted and everybody's screen is off that is live attending. So don't worry, nobody can see you. Um, and if you want to communicate with me, which I want you to do, please chat. So you just have a chat box where you can ask me any question or reply back. I want this to be an interactive session, please. So not just me talking through the screen with you, but also you communicating back with me. So while people are still joining in, I see already some familiar faces, which is great to see because we are doing this on a regular basis, different topics, which I will explain a little bit more briefly later. But yeah, this is something you can do on a regular basis, joining this masterclass on a monthly basis to be exact. So I hope everybody can see my screen as well. And if not, then let me know, please. Just let me know in the chat if you cannot see me, cannot hear me, or you cannot see the presentation. It's very important that everybody's able to see that. Now, I want to talk today with you about passive income and the convenience of that. But before I do that, I want you to know, if you're not familiar with me, who I am. My name is Simon Snowder. I've been 10 years working with clients in the financial advisory industry, and I also train about different topics related to the financial industry. I am from the Netherlands. I am 36 years old, almost 37. Next masterclass, I'll be 37, or maybe the one after that, depending on the date of the next masterclass. I like to travel and have clients around the world. I'm married. I'm based in Dubai, UAE. I have two daughters. And for the people that are familiar with me, sometimes when I do Zoom calls, when I'm working from home, they just show up on the screen. Everybody knows how it is when you work from home. Um, and yeah, what I like to do is I would like to explain to you a little bit about that there's also other masterclasses available. So today masterclass is not the first one. We are we have already a record with more than 30 different masterclasses. Today I will be the only speaker, but many have different speakers as well. You can find them on my website, simonsnowder.com. You can find them on YouTube, and every single one of them has a Q&A session there as well, and they're free to watch. So if you want to know more about a certain topic, you can watch that as well. And beside of masterclasses, I also have different other services which I do. I have a podcast which I release every month, where I have an industry expert or an expert coming with an interesting story to share that with me. I do monthly educational videos. I do speaking engagements as well. A couple of weeks ago, I was at a university to share more about the power of investing and financial literacy with university students. I do a lot of social media postings on LinkedIn and other platforms to share more content. And I have a monthly newsletter which I release, which you will be automatically subscribed to as well by joining this masterclass. And I do investment management. That's my core job. My core job is to grow my clients' money and to help them achieve their financial goals. So here you can get a little bit of an insight of the previous masterclasses that I did, different topics such as retirement, about art investments, how medical insurance works, crypto, you name it, inflation. We have tried to cover as much as possible different topics. Next month, Masterclass, I will give you already a heads up, is about the UAE corporate tax. On the date that we will be doing that Masterclass, which will be on the 20th of July, you will see that we will be already 50 days live for UAE corporate tax. And I have a speaker for that as well, which I will announce soon officially as well, more details about that. So if you want to find my podcast, you can go on Spotify and all the major platforms. You will, on YouTube, you name it, it is there. And if you want to connect with me on LinkedIn or whatever platform you're using, please try to connect with me. I'll be glad to be in your network as well, in case we are not connected yet. So I will not leave you empty-handed, no matter what, after this session. You will get through our tech partner, which is Cluely, you will get an email. If you click on that email, it will allow you to get a reward, which is to claim your credential. If you need to activate your account, that's the step that you need to do. And then you can download a certificate for your session today. And then if you want, you can share it or store it together with other certificates that you have. So this will be complementary and this will be shared by you. So in case you don't get it within a couple of days, please reach out to me and I'll make sure you will get your certificate. Any questions you have so far, please ask me. Okay, there's a chat that we will have a chat session open. Even while I'm talking, you can ask your questions. So even right now, if you want to know something, feel free to ask me. So what is the agenda for today? I want to cover in different steps what we're going to talk about. So I want to establish your passive income position because we are going to talk today about passive income in more details. I want to talk about some business cases of real life examples about how passive income can have an impact on your financial situation. I also want to talk about how you can generate passive income through existing fixed income options that I have invested in myself and that my clients use and that are very popular. So we're going to go in more details talking later about it. And we will have a Q&A session at the end as well. But like I said, if you have any question, meanwhile, I want you to share that with me. So passive income. If you see this description and you think that you don't want to work for the rest of your life and trade your time for money, you want to make money while you're traveling and or do what you want, be free because your income is generated without working. If that's what you're looking for, if for a secondary income, then you are at the right place because today that is what we're going to talk about. So first, I want to start with a poll to know what is your passive income situation. So I'm going to release a poll. Launch. How much passive income do you have right now? This is anonymous, by the way. Nobody will see what you're clicking on. Nothing will be shared in public. This is just for me to have an idea for the people that are live, what your position is right now. So I see a lot of people clicking on things. We have almost 80% already voted. Okay, great. That's a great representation. So I am going to close it and I'm going to share the results. Does everybody see the results? Because I want to talk about this a little bit before we move on. So 40% has zero passive income right now. And then we have 30% that has between 0 and 10,000 passive income. And 10% has between 10,000 and 25,000 passive income. And 20% has between 25,000 and 50,000 passive income. And 0% has more than 50,000. So we see that the majority of the people have either 0 passive income or 0 to 10,000. That's 70% that is in that group. So it's good that I know that, because that allows me then to use that in this presentation. So probably if you have 0 passive income or not much yet, this is a great way to see if you could potentially start and potentially start with your journey in finding ways how you can build up your passive income. So I hope everybody can see my presentation, because I switched now back towards the presentation. If you don't see it, then please let me know. So I want to share with you the first business case, okay? The first business case is where we will look at a scenario that you need 50,000 income per year. Let's say dollars, just for the sake of it. It can be any currency, but dollars will be used for this example. So how much do you then need to build up the 50,000 in income? How much capital do you need? Now, if you have $1 million and you have invested that with a 10% income investment, you're generating 100,000 per year. But that 100,000 cannot be consumed in full. And I will explain you why. Because every time, every year, the costs rise. Things become more expensive. And since the past couple of years, we have seen extreme inflation, which means double digit in certain sectors. And that can happen again in the future. So if your income is the maximum income that you will have for the rest of your life, then maybe not immediately you will feel that your cost of living will decline, but in the future that will happen. So we want you to be comfortable and plan for this properly. Also, you might need to pay tax on your income that you generate, depending on where you are in the world. Maybe you are in a place where you might be paying tax on that, and for example, 20% or 30%. So it's good to have a gap between what you need and what you have, and that you generate more income. So therefore, 50% of what you generate is used for your cost of living. So in this case, you need 50,000, and the remaining 50,000, if you can reinvest that in full because you don't have to pay tax, then you reinvest that, because then the next year you can give yourself a pay rise of 10%. And then every year forward, you can keep paying yourself more income. And that's a much better scenario where you will pay yourself every year more without doing anything again. So I hope that is clear. If that is not clear, this case, then please share with me any questions you might have about that. Now, the second case is if you need double the amount. These are just examples. Everybody has maybe a different figure. If you need 100,000 income, 2 million invested with 10% income would generate 200,000, and then again 50% is used for your cost of living, 50% goes back into your pot to increase your income or to pay some taxes that or some other expenses that need to rise out of that. So it's very important that you have a good growth on your capital so that you have a lot of income coming out of it. So the 10%, some people might say, ooh, that sounds a little bit high. But later in the presentation, I will share with you 3 examples how you can generate 10% or more per annum income. And this will be talked about later. So that's why I'm using the 10% as a minimum barrier for today's session. Any questions about this? please feel free to ask me. Now, I have here a task for you. The task is, I want you to write down, and if you're not in a position to write down, please think about this. This is important. If you have not asked yourself the question yet, how much income do you want to have a year? Is that 75,000? Is that 100,000? Is that 250,000? How much? And everybody will have a different answer. Some people have similar answers, but not everybody will have the same answer, because this depends on a lot of things, right? Your cost of living currently, what kind of lifestyle you want in the future, where you want to be, what the cost will be there, how active you want to be, then if you're having other secondary incomes or not, if you're still working. So how much income do you want to have a year from passive income? And how much capital invested would it be? So how much capital in total needs to be there to generate that passive income? And how take you to get to that point? Is it 1 year? Is it 10 years? Is it 50 years? So please write this down. Please say it to yourself if you cannot write it down. Have that clear for yourself, because it's important to have this thought about, because the more you understand your endpoint, easier it is for you to work backwards and find ways how to make this happen. So I hope the people attending are able to do that. For the people that will watch the recording later, it will be easier for you to do this, because you can pause this and then go somewhere and get a pen. But I'm going to move on gradually to the next slide, because I think it's clear that in case you are not in a position to do something, just pause then, take a print screen of this and do it later. Write down, it's very important that you write down. I have written down my own goals. I can tell you what my own goals are. How much income do you want to have a year? Between 100 and 150,000 euro per year. How much capital invested does that need to be? That means to be that for that amount, I need to have to be very comfortable, I need to have around 3 million invested. How long will it take me to reach that point? Well, I'm aiming for myself to be there around my 40th year, when I'm 40 years. So I have 4 years left. So that's my personal goal. And maybe your goal will be different. So now we're going to talk about the 10% options that can generate for you income. These are fixed income options that are bonds and loan notes, okay? Now, they all have something similar with each other. These are contractually agreed returns. So this is a contract, so it's not breachable. And they all have a maturity date. So it all comes to an end at one point. It's not forever. So you have a start date, an end date, and then you have the contractually agreed income that needs to be paid in that period of time. They are paying quarterly or biannually coupons. Coupons are payments that are being made to your bank accounts. These are not dividends, because dividends can be changed by the board. For example, they say next year we will not pay dividends. This is not possible. You're not allowed to just make up when you pay coupons or not. You're contractually obliged to pay the coupons. And this is then transferred to the investor's bank account. There's a minimum period of 1 year and a maximum period of 3 years for this. And the options have protection and securities in place for investors to reduce their risk, which will be explained later, because every different bond and loan note has different protection and securities in place for investors to reduce their risk. They are recession proof, which means that no matter what the cycles are, ups or down in the economy, they will still make money. The underlying assets will still make money, and also the investors can still be paid therefore, which is very important. This is one of the requirements that I think is very important, especially in the climate that we're living right now. And the returns are starting at 10% per annum up to 40% per annum per year. So that means that every year you can expect between that, and that's depending on which bond or loan note you have contractually obliged yourself and enrolled into. So the selection criteria that I want to discuss about, which I personally use when I go through fixed income option, is can it give above 10% per annum or 10% per annum? I will give a rating for that between 0 to 10. I think that's the higher the rating, the better it is. How likely would it give returns in 2023? Is it able basically to consistently pay money? And what are the protections in place to offset the risk of investing? Because investing by itself always has some risk, can be a little bit risk or a little bit more risk, but I want to know what are the protections and securities in place for an investor to offset that risk. And what is the track record, which means how has it been performing to date? And of course, I discussed as well earlier about if it's able to make money no matter what the economic cycle is, and that is recession proof. And how is the exit strategy looking like and the time horizon? So how will I get my money back? How long will it take before I get my money back? These are very important things for me as well to consider. And I want you to consider these points as well. So we're going to do another poll. This is poll number 2. And I want to know if you have invested in a fixed income option to date, in a loan note or a bond that is giving you income. So yeah, around 70 people have voted already. I'm collecting a little bit more responses. Okay, I think not more people will vote. Going to share the results. So say 78% of the people that voted, which is around 70%, says that I have invested in a loan note or a bond for fixed income. That's great. That's great. So you have an experience and you have also a benchmark potentially. And 22% said no. So if you have not invested, maybe now this will be of more interest for you after you go through the session and see this asset class and what it can bring to you. So I'm going to hide the poll results now, and I'm going to continue with the next slide. Okay, so I'm going to share now 2 loan notes and 1 bond that we will be featuring in this session, and they all make a different income. So the first one, which I will share with you, is Woodville. Woodville is a loan note, which is a litigation fund, and it's giving 10% for 1 year and 11% for 2 years if you invest in that. And it pays out quarterly coupons in different currencies such as GBP, USD, Euro. So how does it work? How do they make money? This is something that I look at always. So they borrow out small loans to individuals that have the right to get paid by the insurance because, for example, they had a car accident and the insurance company doesn't pay them. So although they should get paid, the insurance company is not fulfilling the claim. So what this fund does is they check first the paperwork to see if they actually should get paid or there's something wrong with that paperwork and the evidence is not correct. And if they see that everything checks in and that everything is okay, then they will give a small loan to a law firm for 4,000 to 5,000 to accept this claim from this individual. And this individual then will be represented by a lawyer that will claim their money on their behalf. In 99% of the cases, just the first letter from the lawyer leads to an immediate payout by the insurance company. So that is because the insurance company now knows now that they are lawyered up, that they have the right to get paid, and they actually say, this is the deadline to pay. If you don't pay, we will take you to court and we will win, and then all the cost for that we will claim from you as well, because you are delaying the claim. So 1% of the cases goes to court, and all of them have won to date. So almost 40,000 claims have been so far processed, and zero defaults till date, which is a very impressive track record, which just shows that this is very successful and that they're making good money by allowing people to fulfill their claims. It's also recession proof because of that, because there will always be parties that are not following the law. This is based in the UK. Another example of how they make money is that in the UK, if you go to a car dealership and you buy a car, and the car dealership offers you to speak with somebody for financing, then by law they need to disclaim that if they have a financial relationship with that party. So if they refer you to another party and they don't say we have an incentive for referring you to them, then that they need to pay a certain claim on that. And in 50% of the cases, approximately, they don't do that. So again, they get a lawyer, they establish this, and they get paid. And this is also why banks don't want to fund this, because banks give higher rates sometimes for these car loans that people take, because they're not aware that they're being referred to a party that has a financial incentive with a car dealership. And also banks have often in their portfolio, because they're part of a bigger group, insurance companies. So they're not keen in funding the mechanism that allows them to pay out things. So that's why they don't fund this, and that's why this in this case they'll go to individual investors and institutions for money to make money. So like I said earlier, zero defaults and recession proof. The asset class is not correlated to the financial markets or the real estate market. For example, if the stock market goes up and down, that doesn't matter. If the real estate goes up and down, there will always be claims against these parties, and their way of doing business is different. And there's up to 6 layers of protections. And one of them is a guaranteed underwritten by Talisman, which is part of the Lloyd's Group. Lloyd's Group is a AA rated institution. So they are willing to give a guarantee underwritten in cases where people invest 100,000 or more. And this is something which you can get complimentary then. And there are 5 other protections as well. To go in a little bit more details about some of those protections, the investor has the full claim amount until they get paid. The full claim that will be made is in the first legal charge given to the investor. The law firm that receives the money as a loan, they need to sign off that they are liable to pay back this amount. And the owners of the law firm, which are reputable law firms in the UK, they need to sign that they are directly liable as well to pay back the loans in case if that fails. And this makes it also easier then for a big institution like Lloyd's Group to give an insurance on this, because they know there's different layers there. And also there's another insurance as well, which is called ETA insurance for investors. Is there any questions that people might have about this particular low note? If you have any question, the chat box is open. Yeah, somebody is asking me what the returns were for this one. Okay, I'm going one slide back. So for 1 year, So if you invest for 1 year, you're getting 10%, for 2 years, 11%, and quarterly coupon payments. And it doesn't matter how much you invest, you will get the same return. So if you put in 100,000 or 100 million, you're getting the same. There's no difference. I'm getting another question about what the minimum investment is. Yeah, that's a good question. So the minimum investment is 25,000 in either of these three currencies, Euro, USD, or GBP. I'm getting another question here from Sikar. He's saying, what's the overall estimate loan note value? 50 million pounds, and then a new one gets issued. So you have version 1, version 2, and every time they can do 50 million, and when they reach 50 million, they issue a new one. I have another question also from Ikram. What is the cost, if any, for these investments? 0. So I repeat, the cost is 0. So 10% is net of, I think I had this, no, I did not mention this in the previous part of the presentation. My apologies. So the cost is nothing. You don't pay, you don't have a cost. So there's no AUM, there's no deduction, there's no hidden fee. So 10% is 10%, 11% is 11%. So of course people will ask me like, okay, what are you earning from this if your clients invest in this? Well, we take a commission from the institution directly, so without compromising the income that the clients get paid. So no, Sikar has a follow-up question. So no processing fee payout after tax? No, that depends on your tax, depends on your location where you live. So if you live, for example, in Switzerland, you're paying up to 30% tax on this kind of investment. If you live in Spain, it's, for example, around 20%. If you live in the UAE, it's 0%, because we don't have a tax in the UAE for investments. The processing fee, no, there's no processing fee. The only difference, or I would say a fee, but that's applicable with everything, is your bank that charges receiving fees. But that depends on what kind of relationship you have with your bank. So that's, for example, if you are supposed to receive $1,000 coupon payment, it could be that your bank takes like $3 or $4 for receiving that money. But that depends on the bank that you have. So thank you, Sikar and Ikram, for your questions. If you have any other questions, please feel free to ask me or anybody else. So I'm going to move on to the next one. Unless people have a question about the Woodville one. If you have any question, I can always jump back in. Feel free, please, to share if you have any question. So this is the Godwin loan note, okay? Like I said, I've invested in all of these ones myself. So and my philosophy is the following: if I am going to lose money, and I think there's a certainty that I will have a high risk on an investment, I don't invest in anything. I make a lot of money with my money, but I like to calculate my risk properly. So having said that, if you want to see proof of that I invested in all of these investments, I can happily share with you my bank statements and my transfer details, which show you that I've sent money from my bank accounts, and proof of, you know, my certificates that I got from investing in this. So it's not, I'm not being non-transparent with you. I'm being very transparent with you because that's the way I like to work. So this is a Godwin loan note. And the nice thing about this one is that it's giving also an option to get deferred interest payments. Deferred interest payments mean that you get it after your term, which is after 2 years. So this one only has one option. For 2 years, you can invest. You either get coupon payments every 6 months, which is 10% per annum. So you're getting paid then 5% every 6 months. And then after 2 years, you get your money back. Or you take option 2, where you get your money back after 2 years plus 24% interest. So this is offered in different currencies, in Euro, USD, and GBP, pound. And it's asset-backed, that's their security, by real estate. And it's UK-based. And the real estate that they have works the same way as how a bank works when they give you a loan. So when a bank gives you a loan, they say, in reality, we own your house. If you fail to pay us, we will take possession of your house until you have paid us back the money and you have paid the interest on the money, on the loan. This is the same thing, only the other way around. Only because this is larger amounts, they don't give a house as collateral. They give buildings, so that the investors have the security with that. And that is being put in an independent trustee, which is FCA regulated. And that independent trustee then oversees if the investors get their money back. And if so, they will make sure that they don't have to take possession on the real estate of Godwin in this case. Another important thing to note about this investment is that I'll move on to the next slide, and I also see that there's some questions. I put by accident almost 2 years track record, but that's 20 years track record almost. So my apologies, that's a little typing mistake. I have here a question from Luke. For those investments, could you please tell us how liquid they are? Meaning, are the funds blocked for the period? Yes, the funds are blocked. So this is a contractual obligation that you have for both sides. So that means that if you decide for 1 year, then you will get a document, a certificate, which says your money is invested and it will be coming free 1 year from now or 2 years from now with the end date. That is the contractual obligation that you have committed by investing. So that is your obligation, is to leave the money there, and you need to wait till that date and then you get the money. The same thing works with fixed deposits with banks. You lock in your money, for example, for 1 year, for 2 years, and you cannot ring the bank and say, guys, I need to access my money now. They say, no, we're paying you money until that date, and it's locked in until that date. So that is how it works. It never defaulted in 20 years. If that business model is that they develop real estate and they already sell it before they start. And they're specialized on working, for example, with major supermarket chains like Lidl and Audi, where they identify land, they go to them, they say, look, what if we build a supermarket for you there? Lidl or Audi says, that's a great location. Here's a 25-year lease contract, and they sign that lease contract. And then they go to a pension fund or asset manager and say, look, we have here a supermarket which are going to develop. We already have a Lidl and Audi as a tenant. Do you want to buy this? And remember, they have not even built it. And then they sell that. They make an agreement that when it's completed, the project, they will sell it on to them, because the pension funds will get then a 25-year lease contract from an A-rated company like Lidl and Audi, which is very good for their business model. And they do the same for McDonald's, Starbucks, Burger King, where they do roadside places, and they also do bigger things like buildings for which they then sell off. But always their business model is to sell it first and then build it. I have a question here from a couple of questions about CCAR. What guarantees are associated with Godwin loan note, especially when the real estate sale doesn't occur in full? So you have through the trustee, you have a first legal charge on the assets, and Godwin doesn't use money from investors unless they have a sales agreement in place. So the money is not used unless the project is sold already. So that is something which is written also in the agreement with the trustee. So the trustee is not allowed to transfer the money out of the bank account from that the investors have put there until they have a sales agreement in place. Is it volatile for recessions? I don't think it's volatile for recession because they only engage in projects where they already have sold it. So they deal with very reputable parties that buy it. So they will only build what they have sold. That's it. So, and their markets that they move in is, for example, supermarkets, like that, like people that know Lidl and Aldi know that they do very well during recessions because they are very good products and they're cheaper than the competition. So they expand even further during periods where there's a recession. And people eat more McDonald's and Burger King during recession as well because they have less money in the wallet and can go and they cannot go as much out to restaurants as they want. And instead of that, they tend to go more to fast food chains then and spend there more money because then their budget is a little bit lower, but they still can go out. What is the overall estimate loan note value? Yeah, so this one loan note is 50 million pounds. And for this one, Godwin has already issued more than 8 different ones. And they are more than $1 billion company. So yeah, so every one of them finishes. So for example, now they are in series number 8 and they have like loan note number 8 and then they have different series 1, 2, 3. So they have already completed 1, 2, and 3 and now they are going into number 4. So automatically they cannot accept more money if there's already 50 million in it. Already they will go to the next one. For example, they can issue a new number like loan note number 9, or they can make 8.5. That's up to them to decide. Does somebody have any question about this one? Any other question? Okay. If not, it can still come. If you have any questions, I can jump back on this. Now I'm going to the bond that we have that I will share with you. It's 14% per annum, paid out quarterly, and their business model is as follows. So first, the money goes into an independent trustee. The independent trustee will release 3 to 6% of that money, and that will go then into 9 portfolios that trade into G20 currencies. G20 currencies are currencies like the euro, the USD, the pound, the Japanese yen, the Canadian dollar, the Australian dollar, and other currencies that are used worldwide. The underlying assets are cash because first there is cash, and then the 3 to 6% goes into trading, which are all in currencies, which is another form of cash. And it doesn't matter what happens worldwide with the stock market or real estate market or anything else. They will be just playing on the differences between currencies. So that's why it's also recession proof. Here you can see a chart of how they have in the past years been paying out consistently the coupons. And I'm going to look at a little bit more details. The minimum investment is 50,000. The loan notes minimum investment is 50,000. So that is something that that is different. It's a higher minimum. There's no setup fee, no initial cost, no annual management fee, no exit fee whatsoever. Just like the other options, there's no fees whatsoever. The bond is issued for 3 years, but after 1 year you can exit. So on the anniversary, 90 days before the anniversary, we give them a legal note, an email notice where we say, okay, we want to stop. They confirm it. That's it. But it's 90 days before the anniversary. And yeah, it is in USD and in pounds. That's also good to note. But it can also be done in euro. I did one in euro myself, but I needed to prove, I'm based in the UAE in Dubai. I needed to prove how I earned the euros, which was not easy. So what I did actually, I showed them that I sold one of my properties in the Netherlands, and that money was then transferred to me to my bank account, and I showed them the proof of that, the sales agreement, the money being transferred to my bank account, bank statements showing that I received that money. Because of the anti-money laundering checks, they're required to do that. So then you can do it in euro as well. If you're resident in Europe, then you can do it in euro as well. So that is case by case, they can do euro. But USD and GBP, they don't have to dig in too much about how you acquired the money. Any questions about this? Please let me know. Yeah, I have a question from Zikar. Security bond fees for William John Accruvis bond are needed from the investors as well. No, it's not needed from you. It's just that how this works is that why I've written this down is that um, this is a protection that is legally being put in a document where the money is owned in the end by the investor. So there's a bond, and it raises 50 million. In this case, it raises 50 million. So every money that leaves the account, 3 to 6% from the security trustee, they will monitor this on a monthly basis, like an audit, to see if William John is having enough money, enough collateral to fulfill the full amount that is in the bond plus the interest that need to be paid. So if you enroll for something like this, you sign an application where you say, okay, I want to invest in this, and this is the amount I want to invest in this. And we help with that application. We make sure that all the documents are properly acquired. We make sure that we can show to them how the clients have earned their money, where the money is based, etc. So then they can process that, because all these institutions, they don't engage directly with investors. They use companies like ourselves to deal with them, and that's why they pay us as well. And then we help the clients to identify the opportunities for them and help them with the application, and then we manage and service them during the whole process from A to Z, and also afterwards. So every time a coupon payment is made, we email. I say, hey, this is the coupon payment that is being made to you. Have you received it? To make sure that everything goes smoothly even afterwards. So Sikar is asking, so the regulated trustee guarantees the investors money in the triangle setup to maintain the security in the bond. Yeah, so yes, so their obligation is to make sure that there will be enough money in place for the investors in case there is a non-payment, in case there's a default. So in case one person doesn't get paid their money back, in case one interest is not paid, then legally a domino effect will happen. The trustee will freeze everything, and they will enter into the company's accounts and block their bank accounts and stuff, and then grab as much money as they see fit, and then they will return the money back to the investors. So that's how that works. So and then they're also not allowed to raise any more capital because everything is frozen until the trustee has finished their job. And this is how the mechanism works. It's a very strict mechanism. Are there any other questions? If there's any other questions, please let me know. Okay, so I have here a poll, the last one. Okay, so my question to you is, why have you not reached your target passive income amount? what is the reason behind it? Okay, we got almost 80 people, 80% voting. Okay, so 86% says that they have enough savings, but they don't know how to utilize it. And 14% says they don't have enough savings. Now, it's a great thing if you have enough savings. That's a great thing because it's not easy to build up those savings. And I understand that if you have built up savings, you don't want to lose that. You want to, make wise decisions and properly find ways how you can generate income from that. But the nice thing is that you have a head start because you are able to generate the passive income that you want if you utilize that properly. So I want to share with you in the chat for everyone the option. If you want to discuss further with me, you can book in a Zoom meeting with me where you can talk with me and discuss with me more about the options that I shared. We have more options as well. We have more options for fixed income, but I've highlighted 3 that I think were suitable to discuss during this session. That doesn't mean the other ones are not good. It just means that I have 1 hour of your time, which I'm very grateful for. Yeah, if I highlight 3, then we will pass the hour. And if I'm going to highlight like 5 or 6, then it will take longer. You don't have to book in a meeting with me if you don't want to. That's perfectly fine because at the end of the day, the session is meant with the idea to make sure that you get more information about how you can generate passive income, what options exist in the market when it comes to fixed income in more details, and why it is very important that you build up your passive income, and in what mechanism that you always need to build up more so that you reinvest back. So these things are the takeaways which I hope you realize today, how much income you need and how much capital you need to build up, and that hopefully is something that you walk away with. So hopefully you have any. If you don't have any questions for me, maybe you do have, please let me know if you have any questions still. I'm just going to allow people to answer if they have any questions. You can connect with me as well on LinkedIn or any other platforms that I have. If you have any other questions, feel free to reach out to me. So I don't see immediately that any more questions are coming. So that means that I want to thank you for your time and for your engagement. I had great engagement today. People asking a lot of questions, people participating in the poll, which is great because I'm sitting here on the other side of the screen and that's what I need, some interaction with each other. And it was my pleasure to present to you. My name is Simon Snouter. I'm wishing you a great day. Goodbye. See you maybe next time.